So closing out 2023 with solid results, but the stock keeps on crashing. Currently at a $1.13 billion valuation, going for around $7.24. Let's go ahead and take a look at Coursera and what is going on with this company. So first things first, this company is actually doing pretty well. 6 consecutive quarters of total revenue growth and 5 consecutive quarters of earnings per share growth. The most recent 2 quarters, December and the March period, they posted 36% year-over-year increase and a 62% year-over-year increase respectively. And so again, this company is actually doing good. If you just look at the numbers, don't pay attention to the stock too much. Fourth quarter revenues of $169 million. That is a 14% increase year-over-year. So that gain was driven by gains at all 3 segments. So the first one is going to be the consumer segment. The consumer division, which is the company's largest revenue generator, posted a 22% jump in sales thanks to strong demand for entry-level positions. Some of the biggest courses they talked about are going to be the Google, IBM, and Microsoft courses that they do offer. And then for the university segment, with strength in the campus verticals, it helped drive a 15% sales increase. Coursera for Business, which is the enterprise section, total number of paid enterprise customers increased 19% to 1,369. So overall for Coursera, it does look like they are going to continue improving their top line and also bottom line improvement for 2024. Take a look at the cash flows real quick, cash flow per share and also cash flow from operations. The latest cash flow from operations, they posted 19.8 compared to 4.8 in the March of 2023. That is a 300% increase year over year in an improvement in their cash flow from operations. When you take that per share wise, it gets even better. That is a 1,100% improvement in their cash flow per share. When we read through the transcript, management does talk about how they believe individuals will require higher quality education. Again, the company has partnered with top research universities and companies, including Microsoft, Google, and Amazon. So just looking at the quarterly data of the recent 2 years, it does look like this company has huge improvements coming its way. At the same time, the stock keeps crashing. I feel like if the stock keeps crashing, but the company keeps on improving, it's a good time to dig a little deeper and see how the company is doing yourself. So again, Coursera, currently pretty much at a $1 billion valuation for $7. I guess a good question to ask yourself is this company safe to put my money in? One reason why this company sort of opened my eyes and I started digging deep is the amount of cash they are generating. With the improvement of their cash flow from operations, let's take a look at the cash they have. They have $725 million in cash. And when we take a look at long-term liabilities, they have no long-term debt. So a company with $725 million in cash with no long-term debt, currently selling at a $1.1 billion valuation, seems like a steal, but let's go ahead and dig a little deeper. So this cash position right here, we're going to take total cash, subtract total long-term debt, which is 0, and we're going to divide it by total amount of shares outstanding. That gives us $4.66. So pretty much if you take the cash alone for this company, it's going to give us $4.66. And the price of this stock, currently selling at $7.24, that is a 66% discount that you could buy this company for. I really don't see how this company could fail in the short term. So let's just pretty much talk about why the stock keeps dropping and why this company is still posting negative earnings. We'll go more into detail on that. And a lot of it has to do with their operating expenses. And since they are a tech company, they do hold a lot of intangible assets, which means a lot of the old accounting standards don't apply to this company. So this is their latest annual report. So this is their total operating expenses, and most of it is going to go to research and development, sales and marketing, SG&A, and some restructuring charges. Since it is a tech company, the company has to spend time and money up front. That's just how accounting rules work, instead of amortizing, depreciating some of these assets. So research and development and sales and marketing are considered investments, but in our old accounting standards, most of these expenses must be recognized immediately. Part of the reason why it's causing them to sort of post negative earnings is just because of our old accounting standards. Anyways, I do want to cut the video here for now because I do want to go into more detail into the operating expenses of Coursera. I'm going to save it for a part 2 of this video, and I do want to do a deeper dive into sales and marketing, research and development, and I also want to talk about value creation. So we'll save that for another video because it is going to be a longer video than this one. This is just a brief overview. This is part 1 of Coursera. Let me know what you guys think. Do you think it's an undervalued investment at this valuation? I believe it is. I think a lot of people are missing something. But yeah, thanks for watching. Comment below so we can have a little discussion. And we'll see you on the next one.